Hey, Colin, here we are again, a third video talking about gold and the fundamentals. So how are you doing?
I'm good. Angel, and yourself?
I'm good. The last 10 trading days has been really volatile to the upside in the overall stock market. Gold has been kind of moving in the volatility box between 1680 to 1740 as far as the price is concerned. At the same time, GDX, the gold miner index, has been kind of shooting up straight up since March 23rd of the stock market lows. So I think a lot of people are starting to pay attention to gold miners and the outperformance in comparison to gold and even the stock market. So I think it's a pretty interesting topic for us to kind of dig deeper into it and kind of maybe you can give us a little bit of the nuggets on why this is doing so well and why our investors start flocking in.
Yeah, you're right. The overall market has gone up the last few weeks. And, after the big drop off in the mining shares because of the liquidity event, when everyone was looking for capital and the margin issues, the mining shares have come back faster than any other sector. And I think part of that is the inflation expectations over the next couple of years are most likely going to happen. In the short term, yes, there's deflationary forces because of the demand shock that we've experienced. But, in the GDX, I don't know the exact number off the top of my head, but I think it's up, the low was 16 or 17. And now in an intraday high, I think was like 35.51 or somewhere in that
Yes.
neighborhood. So, I mean, it's up over 100% just in a month or so. And this unprecedented monetary experiment that they're running, and who knows where the Fed's balance sheet will end up.
Yeah.
Gold is a good investment for that. And in the 1970s, when they were doing the crazy monetary experiment and taking us off the gold standard, the mining shares and gold did well.
Yeah. So I think the point that we try to really convey is that mining stock has a tendency to really perform at the same pace as the stock market, but in environments like that, it could really be an alpha trade where the multiple expansion of the mining stock can really expand because of the fundamentals that we talked about, and at the same time their earnings are really doing well. So while companies like Apple, Microsoft, their earnings are sort of stagnant, if not actually going down for the next few quarters, people are buying in for safety and just try to expand the multiples. Mining stocks are actually doing really well because of their strong earnings due to the increase of the price of gold.
Yeah, and not only the increase of the price of gold, their number one cost is oil. So, oil has gone down to, we had a futures contract that traded to negative, $47 or somewhere in that neighborhood. So mining is very energy dependent. So as these costs in oil have gone down 25, 30%, and then their main product has increased from $1,200 to $1,700 over the last few quarters, the free cash flow for these miners is really big. And it's one of the only sectors that is actually increasing guidance for their earnings. And not only that, they're increasing dividends by, 50, 80, 100% in some cases. Newmont increased their dividend by 79%, which is, that's a big number. And some of these earnings per share quarter over quarter are 800% on some of these, lower known miners. And, it's one of the few sectors that actually looks promising.
Yeah. So we have put together a few slides to talk about a little bit on the earnings of these GDX companies, components, and maybe talk about a little bit on the technical side. So excited to show our audience some of these charts. So you ready to do that?
Yeah, here you go. So here's the slideshow here.
get the slideshow going.
So there's a famous billionaire in the world that talks a lot about the Barron's Gold Mining Index. Most people have probably heard of Rick Rule, and he talks a lot about the Barron's Gold Mining Index. And if you look at this chart, it shows you how cheap the miners are in relation to the 1970s. And as we were discussing earlier, the stagflation of the 1970s, and even at that time, an unprecedented monetary policy of Nixon taking us off the gold standard, you can see how high the mining index jumped in the 70s up until 1980ish, 81, from all the inflation in that time frame there. And Volcker took interest rates up really high and whatnot. So if you look over here in the later stages of 2019, early 2020, the gold mining index is very similar to the beginning of the or late 70s, and it's trending higher. And I don't see why now that the 2-year Treasury futures of showing negative for 2021, negative interest rates are probably around the corner, and negative real interest rates have been around for several months and years now. So gold will do well, and the miners will do even better. This slide I put together here shows a few of the big companies. There's a couple of junior miners in here, but the gray box there is the year-over-year earnings per share growth percentage, and the blue box is the Q1 2020 earnings per share, and the orange box is the Q1 2019 earnings per share box. So if you see Franco-Nevada there in the first company in the bottom there, it showed 66% increase in earnings per share year over year in the first quarter. So they, 35 cents in Q1 2019 versus 58 cents in 2020 for Q1. So 66% increase it's huge.
Mm-hmm.
As we were stating earlier, they have a good guidance going forward for the miners. And, Wheaton Precious Metals had 69% increase in earnings per share. And Wheaton Precious Metals might be a little overextended right now, but the kicker with Wheaton is they actually have a big amount of silver. So if we do get the inflation expectations in the overall market, Wheaton could go much, much higher, because they're not only a gold producer, they do palladium, which has been good for them the last couple of years because of the demand demand shocks and supply shocks of those metals, and the paper market, blowing up kind of in palladium, that Wheaton could actually go much higher because of the silver that they have in the back there. And then Barrick, which most people know about Barrick, it's pretty big percentage of the GDX, and 45% increase in Barrick. Newmont, as we discussed earlier, had a 79% increase in their dividend. So, and 21% increase in the overall earnings per share quarter over quarter. And see, Eldorado is a little bit lesser known mining company, and they had 73% increase in earnings per share. B2 Gold Corp is even smaller known. It's not as well known. In the Bank of America report that was released a couple weeks ago, where they were showing a $3,000 gold price was their ultimate target. B2 Gold was actually on their list as one of the companies in there that would be promising because of their in-ground deposits and what their inventory looked like that's sitting in the ground. And then Kirkland Lake is probably the biggest and well-known of these. Kirkland's gone up, I think, 600-700% over the last 5 years because of the deposits they have in the ground and each new finding they have. And they had a 45% increase in the earnings per share, even at how large they are. They're still showing that kind of growth. And Kinross is a little smaller, but also a component of GDX, showed a 43% increase year over year. So yeah, as you can see, the overall mining stocks are showing great potential going forward.
It looks like we just really want to drive home that, with the earnings growth in such huge pace, the price to earning ratio is really not going up that much with the stock price going up. So, as opposed to what the technology stocks are doing these days, the QQQs is actually at all-time high as of Friday's close. And their earnings are unknown. They're because of COVID. 70% of the companies are not going to talk about their earnings for the next 2 quarters. But these gold stocks, they are openly publishing their earnings, and they have their projections and forecasts really, really clear for us to see that they are on a growth path, and they're looking really good with the gold price being at this level, isn't it?
Yeah, they are looking good. They have put some guidance in on their mines due to the coronavirus, outbreak. So some of the mines have been closed, but several of them are now opening up. So the production guidance might be a little bit on the lower side, but that will recover in the next quarter or so, because in Vancouver, for example, they're starting to operate at full capacity and the miners are coming back. So, I think the sky is the limit for the miners, at least in the next couple of years, because of this unprecedented, monetary experiment that keeps going. And
Yep.
Gold has always fought the battle of the US dollar, but as you've seen the last little bit here, it's risen with the dollar. So the headwind that was always talked about for gold was the dollar, and now that it's going up with it, and we have no or zero interest rates and negative interest rates, there's no reason why these miners shouldn't go higher. So if we could look at a little technical chart here on GDX, and Angel, since you're the trader, you know a little bit more about the technicals than I do, so you could help our audience understand this a little bit.
Yeah, so I put this chart together. It's a daily chart for the last year. We can see GDX has been kind of trading in a box where the range is predefined between $20 to $30, and with what happened to the stock market in February and March, the unprecedented drop, the fastest drop in the history of the stock market, GDX actually went down along with it. So it's gone down about 48% from the highs, but has recovered really well. So the straight up move is actually pretty much on the trend line, where as of Thursday's close was 34.91, and we can see that the momentum is still going on the upside, although volume is a little bit dwindling, but the whole market has been sort of trading in low volume anyways. And I think that on a technical standpoint, GDX can still move a little bit higher to the upper channel line, but also has the opportunity for entry on the red line, which is a 21-day exponential moving average, and the 50 and 200-day moving average is simple moving averages on $27.90. So I think that's where I think if viewers want to have an entry on GDX, these levels are worth noting, and I think as traders or as investors, we also need to care about the price of entry. So even though we really believe in, the future of GDX and all the mining stocks, we want to invest sort of wisely and strategically. So, I want to throw this chart for everyone to see where we should pay attention to. So, so that's GDX. I think we have a couple more charts on the component stocks, right?
Yeah, this is Newmont, which I described in the earnings per share, and how they had the 79% dividend increase, and they're being quite profitable. So
Yeah.
you've also provided us with a chart on Newmont and the technical analysis. So if you could explain this to our listeners, that would be great.
Yeah, for sure. Newmont is about 22.79% of the GDX component, so it's a big sort of representation of the GDX. So that's the chart definitely worth looking into. You can see the breakout of this particular stock has been really, from sort of that 1 year sort of box is really apparent. People are flocking into this particular mining stocks, not only because of the health, the financial health of the company, but also being the biggest component of GDX. It's one of the strongest company in the index. So we can see the earnings been good. So it's kind of pouncing to the 1618 Fibonacci extension. For people who are actually familiar with that, it's actually just 161.8% move from the low to high of the previous move that I measured. So right now we're kind of gyrating in that level, at that level, trying to see if we want to break out or kind of retrace a little bit. So this is sort of a sensitive point. I think it has a lot to do with what's going on with the stock market as a whole, but also just how gold is going to perform in the next sort of several weeks. Chances are there's always another sort of upswing to the 2618 to the $83, but but there's also chances to be corrected. So at any pullback, back down to the 50s, I think will be a good opportunity for people to kind of look at the fundamentals again, look at the charts again, and see if there's a good time to buy. And viewers have questions, they're welcome to email us for anything. But I think right now, because of the strong outperformance of GDX, we can't blame this particular stock to be outperforming so much. So I think it's actually a healthy sign. And let's see what kind of consolidation we're going to get the next week or two.
Absolutely. And the thing that always had kept my attention with GDX is that in 2011, when we had, more unprecedented monetary, policies told to us by the Fed, the GDX was in the $60 to $70 range when gold was $1,700 at that time.
Mm-hmm.
So we're at $1,700 gold now, and GDX broke out of that 7-year base we were talking about.
Mm-hmm.
So no one knows exactly the future, but as these companies are profitable and everything in the intermediate time frame, you would imagine that the GDX would end up at some higher multiple because these mining shares are making so much money. But yeah, thank you for the technical analysis. And
I think that for these mining stocks, I think is definitely how many people are going to be interested, and how are people going to, what kind, fund flows is really important. Are they going to keep flocking into technology stocks and thinking that's going to take over the world and they deserve a way bigger multiple, or people want to go back to the fundamentals and invest in company that actually makes money, and and bet on the futures of gold. So that's going to be a battle that I'll be really interested to witness as well.
Yeah, likewise. And the fundamentals and the outlook for gold look as shiny as the metal. So we'll see what happens over the next 18 months or so.
Yeah, I think that's you wrap it up really nice for us. So thank you for your time, and we would next week we'll be trying to talk a little bit more on other types of precious metals maybe, and give our audience a little bit more a color on what's going on in the precious metal market. So thank you so much.
Thank you, Angel. Talk to you next week.
Talk to you next week.